Wednesday, June 20th, 2018, Monaco 64, home of alternative economics and contrarian views. Today I want to talk about the debt storm that we're in. And what do I mean by that? Well, it's just, in my opinion, one of the great crimes of the 21st century so far. And that's not to put down all the other crimes like the invasion of Iraq based on a lie and a lot of other things done through war. But yeah, in my opinion, what happened in 07, 08 is the greatest crime, and that's why the economies of the West, the economies of the world are still in a quagmire. You have articles like I saw today on Zero Hedge, and I saw this article after I got the idea to do this video, and this just complemented it, and it says, and I quote, "Italy is collapsing and 5-star is our last hope. How young Italians fueled a populist uprising." So yeah, I mean, you look at the chart on this article, people between age 20 and 34 not employed. Italy, 30%. Greece, 30%. Spain, 20%. EU, 17.5%. UK, just under 15%. Even in Germany, youth unemployment is actually 15%. So, and why has that happened? Well, we have to go through what really happened in 07, 08, how our money system is really built up and how it really works. When people understand that, they'll be completely like outraged how we've actually been played for. And that's why I've been doing these videos for the last 2 years. And it's very hard to get these things. I worked in the city, as you know, of London, or the Wall Street of equivalent, for over 20 years. It wasn't because of the work that I did that I learned about it. It was more of me trying to learn new things through reading, through keeping an open mind about the system and the monetary system, that I came to these conclusions. And even back then in 07, 08, 09, when things were happening, I was telling people what was really going on and what would happen in the future. And just have a quick look at what the markets are doing this morning. It's a little later this morning. It's 8:45. We saw a fairly big drop in the Dow yesterday, I think around 290 points or so. Of course, they managed the drop during the day earlier. Before the market opened yesterday, the Dow was down over 400 points. They didn't manage to get it back up to unchanged, but today we're back up a little bit. Gold hasn't really done much. We're at $12.74, down half a dollar. The range has been $12.73 to $12.76. Spot silver, $16.34, up 5. Range has been $16.27 to $16.38. Some of you who are new viewers, new subscribers, might wonder why I always cover gold and silver first. Why? Because I think they're the ultimate form of monetary protection for people, ultimate insurance. And that's not ETFs or mining stocks. They're like physical gold and silver. They're real money for the last 5,000 years. And it's a way to be outside the system, to have one foot outside the system. Can we completely leave the system? No, but we can do as much as possible not to be too much in the system. And by that I mean not play the banker's game, not borrow money, not lend money. Neither a lender or borrower be, so to speak. So what's the stock market doing? Well, the Dow is up 120, up 0.5%. So it's regained a little bit of its losses, 24,820. S&P, which actually didn't drop that much as the Dow yesterday. It's up 8 points, or 0.25%, 2771. NASDAQ 100 future up 0.25%, 7247. Currencies, European currencies continue to drop a little bit. Not that much of a drop right now. The pound is down only like 8 pips, 131.66. Euro is down 5 pips, so virtually unchanged, 115.84. And the dollar actually rebounded yesterday. from a fairly big drop against the yen. We got down to 109.50. We're now 110.17. So that's kind of stabilized things. The Japanese yen is a carry trade currency. It's a currency speculators and investors go short or borrow that currency because it there's no rate to pay for it. And the Japanese authorities keep the yen, try to keep the yen undervalued or debase the currency. So it's a good way to get money to speculate and invest. So when things start getting hairy, risk assets start going down, like the stock market did early yesterday, people start covering their shorts in the yen that they borrowed. So whenever you see the dollar going down against the yen, that's a sign that things are not well in the overall financial market. So right now the dollar is rebounded, so things have calmed down. Yeah, the debt storm. And why did I choose that name, debt storm? Well, I was watching a video which I haven't finished watching about World War II called Hellstorm, and how the Allies basically terror bombed, well, they called it carpet bomb, the big German cities, but the Germans called it terror bomb. I mean, Dresden was a horrible thing. They killed over 300,000 people, babies, innocent people, during Carnival, which was a festive, how can I say, period at that time in February. And one thing I didn't know about Dresden is that it had a lot of refugees from the east, like 500,000 refugees. So a lot of people were killed in that hellstorm. So now I'm going to talk about the debt storm of the 21st century. Of course, hasn't killed as many people, but probably indirectly will. And the fact that young people can't get any jobs, in Europe, especially, from like graduates to like 35. And if they do get a job, it's a low-paying job. So why does that happen? Well, we need to go to the nature of our fiat money system. Our fiat money system, basically, which is run by the central banks and the commercial banks that are the agents of these central banks. They're the ones who create the money. It's not like constitutional money in the U.S. where if you went prospecting and found gold or silver, you could take that money to the mint, your local mint, Philadelphia Mint, or Denver Mint, San Francisco Mint. You could take that precious metals there, and they would coin your money for you, and it would be debt-free money. It would be money earned, money that you worked for. But in the fiat money system, what happens is actually the central bank does not print the money. The central bank gives the wherewithal to the commercial banks to create the money. So how do they do that? Well, if you go to the bank for a loan of $1,000 or £1,000, they don't go to Mr. Jones, who has $1,000 in their bank, or £1,000, and ask them, "Oh, Mr. Jones, do you want to lend to Mr. Smith $1,000?" No, they just write down on the ledger $1,000 loan to you, and that becomes your liability. You owe that to the bank, that $1,000, and it becomes their asset. So you've got now $1,000 in your account, so you can go out and spend it in the economy. You have to pay it back with interest, even though they created it out of nothing, of course. And that's how it works, the fiat money system. That's the short, simple explanation. And it's called fractional reserve banking. We're told that for every dollar they have on deposit, they'll lend 9. But I would say it's much more now. For every dollar, they'll lend probably 1,000 times, even more. If you take all the derivatives, all the shenanigans they do into account, It's just become a huge credit bubble that has to be, maintained by low interest rates, money printing. I guess the central banks do print money to some extent because they've been doing QE, but that goes directly to governments, so they can spend as well. That creates money as well. So it's not just the commercial banks. So what happened in '07 and '08, this system had gotten so much out of hand, especially through the shenanigans of Wall Street banks, of Frankfurt banks, City of London banks, that the system imploded with the subprime crisis. Everything collapsed. All the quadrillions, thousands of trillions of derivatives were going to come unstuck. So what did that mean to the system? Well, that meant that all the assets that the banks had, and all the assets that on their balance sheet, which were money, were going to be completely destroyed. So there's not going to be any money in the system. They had completely imploded, collapsed the system because of their greed, their how can I say, irresponsibility. And so what did the governments do? Well, and the banks and the treasuries and the central banks, they said, well, we can't have this happen. So what they did is they said, oh, we're going to take money from you in the future, taxpayers, young people, older people, every kind of people. We're going to take money from you in the future and give it to the bankers so that their balance sheets, their assets will be whole again. And that you will have, your debt money still. And that's what they did. So and that's why all the national debts have gone up so much. Right now, officially, US has 21 trillion. The UK officially has like 1.8 trillion pounds. The US $21 trillion, but it's a lot more. The politicians, the bankers, they hide everything. So what they did, they indebted the taxpayer, the public, even more. For what? So that the banks could keep lending to us. So how outrageous is that? They indebted the public so the public could lend the money to the bankers so that the bankers could lend it back to us. So we've basically, how can I say, we bailed out our own slavery by giving, our hard-earned efforts in the future to the bankers. The bankers have nothing. That's why when I hear Jamie Dimon, Goldman Sachs, Lloyd Blankfein, Jay Powell, Ben Bernanke, Mario Draghi talking about the economy and how things are going, or Mark Carney, I have to basically give him the two fingers, because they shouldn't even be around in that business, in the business of banking. Banking is something completely different. Is someone who safeguards extra money that you have. It's not someone that steals or runs scheme like this. So this is a complete debt storm that they've done to people. And it's one of the reasons why the cryptocurrencies have come about, because people are not stupid. They've learned about this mechanism. And am I saying that cryptocurrency is going to be perfect? No, but it's an alternative. So until this whole debt storm, this debt burden that we've been put under collapses, we're going to be slaves to the bankers and the central banks. And that's the only reason they survive, because the government extracted trillions and trillions in future earnings, future effort from the general public to keep the bankers alive, to keep the derivatives mountain from imploding. They didn't fix anything, they just papered over it. And there's a guy on CNBC in 2011 who understood that, and Dylan Ratzigan. And I'll play a little clip of when he lost it in 2011, and I think he didn't last very long there. And he was talking about this, about all the debt extraction and how the politicians and the bankers are working together. He said here in 2011, explains quite well as well. And I'll play the clip right now.
$70 trillion.
I understand that, but
to walk out a $4 trillion solution, which is basically just a way for the Democrats to avoid dealing with this until 2017. I'm not here to talk about plans to deal with this till 2017. I'm saying we've got a real problem, and I'm tired of Republicans and Democrats who either want Republicans who want to burn the place to the ground, and Democrats, with all due respect, who want to offer a plan that gets it through their end of their second term of their presidency, and then screws me and my kids when it's over. And until we do that, we have to deal with the extraction that is at foot. It is the reason the financial markets are behaving the way they're behaving. That is a mathematical fact. This is not some opinion. This is a mathematical fact. Tens of trillions of dollars are being extracted from the United States of America. Democrats aren't doing it. Republicans are not doing it. An entire integrated system, financial system, trading system, taxing system that was created by both parties over a period of 2 decades is at work on our entire country right now. And we're sitting here arguing about whether we should do the $4 trillion plan that kicks the can down the road for the president for 2017 or burn the place to the ground. Both of which.
So there you go. Dylan Rattigan, he didn't last that long at CNBC after that rant. CNBC, of course, is bought and paid for by the bankers. So he you know, he realized what was going on a few years after I was telling people what the bailout of '08 meant. So there you go, the debt storm. Yeah, you need to be prepared. How do you get prepared? Well, live an honest life, have some gold and silver, live within your means. That's all I can recommend. The rest is up to you. So there you go. If you enjoyed this video, please like, share it, subscribe to my channel if you haven't yet. You can also follow me on Steemit, on DTube, and on Twitter. And I'll talk to you later. Take care. Bye.